So, Taylor, we just talked about a single individual earning below the standard deduction threshold. Now, let's shift gears and look at a slightly more complex situation: a married couple. In this scenario, we have a married couple with two children who earned a combined income of $30,000. The question is, do they have to file a tax return? Sam, Taylor, what are your initial thoughts? Specifically, I'm curious, Sam, how does filing status, in this case, married filing jointly, affect their filing requirement?
Filing status is a key factor the IRS uses to determine who must file. Married filing jointly often has a higher income threshold than filing as single. This means a married couple can generally earn more before they are required to file. The logic is that two people sharing living expenses can typically handle a higher income than one person.
That makes sense. So, Taylor, how do you think dependents, the two children in this case, influence the filing requirement?
I'm not entirely sure. I know dependents can qualify you for certain credits, but do they change the income threshold itself for filing?
Dependents don't directly change the initial filing threshold determined by your filing status. However, they can impact whether you ultimately need to file because they may make you eligible for certain tax credits, specifically refundable tax credits.
So, if I understand correctly, even if this couple's $30,000 income is below the filing threshold for married filing jointly, the fact that they have children might mean they should file to take advantage of potential credits.
Exactly. A common example is the child tax credit. While it doesn't change the initial filing requirement based on income and filing status, it can result in a significant tax benefit. If the credit exceeds the tax they owe, they could even receive a refund.
Let's clarify this with an example. Let's say the filing threshold for married filing jointly is $26,000. Our couple earned $30,000, meaning they exceed the threshold and must file. Now, if they didn't exceed the threshold but were eligible for, say, a $5,000 child tax credit, filing a return would allow them to claim this credit and potentially receive a refund even though they didn't initially have to file based solely on income.
This reminds me of what we discussed in previous segment about filing even when you're below the threshold if you had taxes withheld. It's all about getting that money back.
Precisely. And the child tax credit is just one example. There are other credits like the Earned Income Tax Credit that can provide similar benefits depending on the family's income and circumstances.
So, to recap, while dependents don't directly affect the initial filing threshold based on income and filing status, they can make you eligible for valuable tax credits. This means that even if your income is below the threshold for your filing status, filing could be beneficial. Sam, any final thoughts?
It's crucial to understand your specific situation. Publication 17 from the IRS has detailed information about filing requirements and credits.
Great advice, Sam. And Taylor, any key takeaways for our listeners?
Definitely check if you qualify for any credits, especially if you have children.
Excellent point. For everyone listening, a good call to action is to consult a tax professional or use online tax software to determine your specific filing requirements based on your family situation.